What is going on, everyone? This is Max with the RHMax show. Where's everybody at today? Is it don't come to streams Wednesday afternoon or Wednesday evening? Come on. You guys gotta get some more people in this. We got some great topics going on today. One great topic, LP, liquidity providing. That is how the world of DeFi works in a lot of ways. It is a big part of it. And we got two muscle brains here to talk about it, Sam and Stoke. Stoke from Zero X Coast and Sam from Crypto in the Morning. Crypt in the Morning. That show. DeFi proof. It's a great intro. Love the intro of that show. I think Sam has been talking about LP more than anyone else I've ever seen. Just about daily, it feels like. So I was like, hey, you got anything to prepare? And he's like, dude, I just do this stuff all the time. It's already there in my brain. I'm like, all right, I trust you. Here we go. I like it. Let's say not the SBF, Sam. Although, if you hear from him, I'll drop him a StreamYard link. Feel free to jump on SBF. That would be, you're welcome to talk about anything you want. You want to talk about LP. We'll stop the show and be like, SBF needs to talk. We'll take AMA for SBF. I'd be okay with that. UFO, what's up, man? How's it going? Again, share the link. Tag us, tag Sam, tag Stoke. And Stoke's going to be here for probably half hour or so. And Sam and I are going to take care of the rest after that. Lots of demos as well, hopefully. I mean, demos. I said lots of demos. I actually don't know because I'm not doing the demos. So hopefully there's a few. Come get me, aliens. Appreciate it, man. Thanks for coming. Yeah, Sam is here. That's true. Sam is here. He says hello. PulseChain CFO. I didn't know we had one of those. That's cool. I'm glad somebody's keeping the books. Actually, maybe not, because they may get requested one day. So maybe don't keep so good at books. Maybe. If you don't have it, they can't request it, right? Anyways, without further ado, first of all, welcome to the show, Stoic.
What's up, guys?
Audio is online. Love it. And welcome to the show, Sam Stoic. How's it going?
Hey, what's up, Stoic? What's up, Max? How you guys doing today? Thank you for the
Fantastic.
invite.
I've been excited for this stream for a couple weeks.
Thank you. Hey, thanks for stopping by this morning. That was good. I like your strategy with LP, and I think that'll be good for people to learn about what you're doing.
You guys already game plan beforehand. I love it. Super powerful stuff. I need to reprint this shirt because nobody can see it. I'm going to put it higher next time, but I have a RHMax flag here. Nobody can see it the entire time. But so after I got it, I was like, oh, I should have put that at the top. So I'm going to reprint it. It's going to be good next time. Anyways, let's get into it, guys. I want to start off with an introduction, maybe again, since Stokes only going to be here for a little while. He can do some of the talking on the intro to get some of that in. And then we'll get later on with Sam on the demos and stuff too. Of course, you guys can collaborate on topics as well. But just give everyone an introduction. What is LP? What are the different platforms that provide it? Why would anyone do it in their right mind? Like what are the benefits? What are the trade-offs? And maybe throw in Uniswap nuance as well.
Stoic, you want to take this one? And I'll
let's go back a step, right? Let's talk about how you get crypto, right? Because you have to move from a bank account, you have to get your economic energy onto the chain somehow. And it used to be the case that this was really difficult to do, which is why centralized exchanges popped up, right? You had the option in the old days, you could go on localbitcoins.com and you could try and meet up with someone in a private place and actually swap Bitcoin with them peer-to-peer, right? That was one of the ways you could do it. But then there were these other services that popped up, including Coinbase and Circle and various other places where you could go and you could link a bank account, do some minimal KYC, and take your economic value from your bank account and put it onto the chain. Very often this was through buying cryptocurrencies directly, right? You would buy Bitcoin using your Coinbase account, or you would buy Ethereum when it came out. It took a little while, but then this really cool thing called Tether came along when you started being able to do smart contracts. So you were able to, instead of just buying a cryptocurrency, you could buy a stable coin, which is one of the innovations that happened because of Ethereum and the ERC20 protocol. So if we go back a little bit, right, like one of the things that we're talking about with Uniswap is the sort of second generation of buying cryptocurrencies, right? It used to be you had to go through one of these centralized counterparties. And then these brilliant guys at Uniswap decided, hey, let's figure out a way to, instead of you having to get on chain and then just keep your economic energy locked in a centralized exchange where you don't hold your own keys. Let's figure out a way to put this in a smart contract such that you can trade against a liquidity pool that is always there for you. So instead of just, you know, trying to trade on BitMEX or something, or having to look at all these centralized tools where you had to find a counterparty for your trade, Uniswap's innovation was not just, hey, let's put this all in a smart contract, but let's have never-ending liquidity for you. So if you want to sell your asset, you don't have to find someone else to buy it. You can sell it against this liquidity that exists between you and all the other users of the protocol. So that's, in my opinion, the really cool thing about Uniswap and the way it was born. Sam, do you want to add to that at all?
There's I like V3, and Stoic didn't touch on it, but he did a great job of like the introduction into it. And when you look at like Uniswap, so they're like the OGs, they're the GOAT in the DEX world. There's nuance in other areas, but generally speaking, and they have V2, which they came out with before. They came out with V1 and V2, and now they have V3. And there's a big difference between V2 and V3, both in terms of efficiency of your capital, but also in terms of the data one can see in the marketplace. I have a little thing that I pulled up. I'm going to try to share it with you to show you guys. Because there's a massive, I don't know if you can see this, hopefully, RH.
Yep.
Okay, so this here is what V2 liquidity looks like. So if you think about like a marketplace that's efficient, where are all the prices? Generally speaking, all the liquidity is going to hover right around where the price is. If you look at like, say, luxury goods, if you look at, say, banana prices at a farmer's market, you're going to see little aberrations, like this one's 35 cents a pound, this one's 43 cents a pound, this is 28 cents a pound, right? But they're all going to be generally within like this certain price range that people are selling their stuff at. You're not going to see things at like a fraction of a penny for a pound, and you're not going to see things for $8 a pound for bananas. Well, if you use V2 for liquidity, it artificially pushes it, makes the market less efficient. Tremendous innovation, like massive innovation. Like think about what has taken place. Everybody focuses on a token, right? Because we like tokens, right? But I think one of the really, really big innovations that not enough people talk about is liquidity. Because whether it's in terms of race, like Black people couldn't vote, women couldn't vote or didn't have certain rights, right? Or in today's world, the rules are changing slightly over the last couple of years, but accredited investors is effectively forcing people with not a lot of money outside of the bubble of opportunity, right? So if you're not an accredited investor, that's like 200, 300 grand if you're married and you have, or you have $1 million of assets, you're not allowed to invest in this bubble of assets, this opportunity, right? So if I was like, hey, we have this great, amazing opportunity. It's called crypto. Wait, you don't have 250? I'm sorry, bro. Like, but what this has done with Uniswap and DEXs, it has opened the door so that there's not any discrimination to the marketplace globally. Anybody can have access to the market. Anybody, right? Think about what's happened over the last 36 months, where we've seen, I don't like what you have to say, so we're just going to shut you off from the marketplace. That marketplace being, say, having a voice to speak, right? They've been able to shut that door. This door is open to everybody globally, independent of your government, independent of your belief system, independent of the color of your skin, independent of your sex. And this is amazing. It is a massive like innovation that I don't think people fully understand at this point. When you look at V3 allows you to have more of a natural distribution for liquidity. So if you look at the difference between this, right, let me change the color here. V2 pushes all the liquidity across a flat line with just the way the AMM works, and it's not NFTs. It's, I can get into the details if you like, where V3 allows you to spread your liquidity over where you want, right? So if you're selling your bananas for $9, do you think you're going to sell any bananas for $9 when everybody else is selling them for 35 cents? No, right? So you're like, maybe I don't want to put my capital at $9, which it's effectively doing right here, right? Maybe I don't want to put it there because I'm never going to sell anything, i.e. not going to earn any fees in here. I don't want to take up or like go, further, but Stoic, you have any thoughts on V3 or V2 and the whole liquidity piece that like, it's a giant innovation in my opinion.
Yeah, I mean, let's just explain a little bit about what we mean by liquidity here, right? So V2 and V3 here, what Sam is describing is a relationship between two different assets. And those different assets can be stable coins, they can be wrapped Bitcoin, they could be Ethereum. The point is that when you provide liquidity to a decentralized exchange, in much the same way as when you own your own private keys, you're acting like your own bank. When you own the liquidity in a V2 pair or even a V3 pair, you're acting like the centralized exchange. You're saying to the rest of the marketplace, here is capital that I've locked in the smart contract, so it's safe. I can withdraw it if I need to. There's no time lock period. But I am willing to sell one asset for the other as the price changes. So it used to be the case in V2 that if you were, say, on the ETH to USDC pair, you would when you started the liquidity pool, you would have to have 50% on either side of the pair. And that's what Sam is talking about an inefficient system. V2 was excellent to get economic energy such that people could transact with it, but it was inefficient in the sense that it always had to be balanced 50-50. So your holdings, as the ETH price went up, would progressively be less ETH and more USDC. And similarly, as the ETH price went down, you would be effectively buying Ethereum with your USDC. So you have to think about it in those terms a little bit. These are two assets. If you're going to be an LP, these are two assets that you probably want to hold. And you have to be mindful of the fact that as the price moves, and there could be two prices moving. In the example I've used, only one price moves, but you have to be understanding that your asset is being bought and sold all the time as it rebalances with the market.
That's one of the pieces between V2 and V3 from like you're like, I don't really want to provide liquidity, but I love learning about this stuff. Well, you get a lot more information with V3. So if you look at this chart here, let me see if I can pull it up. You get to actually see the difference here, right? So if you could see this chart here, you understand where the liquidity is actually positioned in the marketplace. So if you're curious about what's going on with liquidity, we'll pull up some real world examples later on. Or maybe you're on the LP, like you think it's fun. I think it's fun. I think it's interesting. It's fascinating to me. And I like earning returns. So maybe I want to take a look at something and understand what's going on. There's an interesting example that I'll pull up later between Hex and Hedron, where the number you would see in V2 only tells you there's 50% of this asset and 50% of this asset. When you look at the information on V3, you get to see that 69.4% of it is Hex and 31 point whatever it is USDC, right? So it tells you that more of the market is in Hex than in USDC. And what do we know about an efficient market? Over time, it is always going to be 50-50 or thereabouts. It'll aberrate like back and forth, but you're always going to have a market in an efficient like market over a long enough period of time that is around 50%. And V2 doesn't do that. So it requires, like how Stoke was saying, it requires you to take your capital and basically put it at places where it doesn't make sense to put it, right? Like if I was like, hey guys, why don't you take some of your DCA money and start buying treasury bonds? You're like, Sam, that is 50% less than the annual rate of inflation. Why would I do that? Well, the same thing goes with V2. You're putting capital in places that is never going to be used. Why would you do that? Everything's going to be moving to V3. Go ahead. Sorry.
I just a question on that too, because I mean, a lot of people listening may be thinking too, okay, they exist. V2 is still there. There's plenty of liquidity for different tokens. Why would anyone use it when V3 is there? Like, what are the advantages? What are the situations where you'd want to use V2 versus V3?
Stoic, you want to answer that?
Yeah, sure. You would want to use, or I just have to be very careful that I'm not giving investment advice here. I know I've talked about this recently, right? So when I say this, I'm talking about me, right? Like, if I were going to go and do a liquidity pool where I had very little information about previous price movement, or where I couldn't easily predict future price movement, and I still wanted to hold the two assets that I was pairing, I might want to use V2, because even though it is less efficient, I am less likely to wind up in a situation where the price of the asset moves out of the range of my liquidity such that I'm no longer earning fees. So that would be, an example of, like, let's say that there was a coin that had launched very recently, like within the last month, say, and, there was a large amount of minting of that coin, but no price chart history. And it was likely to be incredibly volatile. You might want to, or I might want to, go and put my LP on V2, such that, it's going to be volatile, it's going to move around, but I'm never going to not be making fees. So it's less efficient in terms of the fee generation, but it's also less risky in the sense that you won't get ranged out.
Have you, and this is more of like a question or thought that I have in that example, where if you have, say, a brand new token, and one of the things that, like, people will manipulate these markets in crypto, it's not illegal to manipulate markets. So 100% these markets are manipulated across the board because people with capital want more capital, and they find it fun to use their capital in a way that wastes them more money. So they will use that, whether it is paying people to write articles so that they fund things, whether it's using leverage, whether it's playing around with liquidity, or this, that, and the other thing. If a token just comes out, right, in the case of what Stoic was saying, I might actually enjoy taking my token that just came out, and because it's brand new, there's no liquidity out there for it, which means I get to actually set up the LP position. When you have the opportunity to set up an LP position for the first time, where there's going to be some type of volume, I think it would be a good idea. I've set up a couple pairs for the first time. I like the idea of setting it up as artificially high so that you can actually benefit and sell your shit really expensive to other people. So if I'm the first person to that farmer's market, and I'm the only one who wants bananas, and for whatever reason, a movie just came out about bananas and everybody's in the market to buy bananas, the token just came out and they're all out there. They want more bananas because there's no liquidity out there, right? Nobody else has bananas at the marketplace. I will just sell my bananas for $4.50, right? Until other fuckers start to show up. But at that time, the price has come down. The ratio has come down. So in another way, yes, you can set it up because you don't really know what Stoic was saying and you don't know which side it's going to go to. Yes. But another way, from an opportunistic standpoint, you can set it up and sell your shit like at a higher price than you might otherwise be able to potentially. But it depends on what you're trying to accomplish. You're trying to buy and hold this thing. You're just trying to earn fee. Like, it depends on how you want to approach that. So, go ahead, Stoic.
It sounds like it's based on the pair too, somewhat, as Stoic sort of gave an example there with some of the new coins that you may not know much about, may not have price history, things like that. Are there certain pairs that either on V2 or V3 they're just win-win pretty much? Is it like Hexacosa or versus, for example, Hexacosa versus Hex USDC? Like, what is the difference in liquidity providing between those two?
Stoic, what are your thoughts on that? Because it depends on the person.
Yeah, it depends on your level of complexity and how you read charts, right? Because the vast majority of us read a USDC chart or a chart that is against US dollar. And so most people understand the charts in those terms. So if that's the case, it's probably easier to be a USDC liquidity provider because you only have to track the range of one asset. and you only have to chart one asset, right? The way to do, like, in my opinion, the way to do like the second level of being an LP is probably to try and LP two assets that are tied together for some reason. And so you can see in the case of like Hex and Maxi, an example of this, right? I mentioned this on the Twitter space this morning with GRC. Like, you would expect that the Maxi price relative to Hex should come after the end of the 15-year stake to a point where one Maxi is worth 5.5 Hex. Now, the reason is because the inflation in the Maxi contract or the Maxi stake should give you 450% yield over the course of that 15-year stake, right? So you would expect the Maxi price relative to Hex to trade from 1-to-1 up to a point where there are 5.5 Hex per Maxi, right? So when you have a derivative of another product, it can be really easy to look at, because you can tell in a rational market how the price should move relative to the other thing. And I mean, I think, LPing derivatives of Hex can be very, very, very useful, because you have exposure to not only Hex, but also the inflation from a Hex stake while you're getting LP fees, right? And you should be able to predict the price movement relatively accurately. You can get ranged out at either the high or the low end. It's certainly possible, but in a rational market, you should be able to predict it. And that's why I was so surprised, for example, to see Deci, Trio Lucky, etc., the other derivatives trading at a deficit to Hex, because what that meant was they had gone out of the rational range. It shouldn't be the case that you should have a Deci trading for less than a Hex, because it's backed by more than one Hex, right? So that's just something to think about if you're going to trying to LP two assets that have a fluctuating price. Is if one is a derivative of the other, it can be easier to predict the price movements and therefore your ranges.
And like, to piggyback on that, there's people in crypto who only own one asset, right? But there's a lot of people in crypto who own multiple assets. So say, for example, in a hypothetical, that somebody owns 4 assets, right? They like 4 different cryptos, and maybe one of those is USDC. Well, generally speaking, if you have USDC and 3 volatile assets, whether it's Hex, Maxi, Cosa, or some other stuff that you like, if you think about it as in a entirety of a portfolio, you probably don't want all your money in LP, but maybe a number greater than 0, at least from a learning perspective, might be a good idea, right? So like, probably less than a 100%, but probably greater than 0% in an LP pool. So when you think about that, you're like, okay, cool. Let's do 10% in an LP pool. So if you take the assets you already own, that you already like, that you're going to continue to DCA in, it doesn't make sense to me to just not provide liquidity with those and earn fees in both of those things. So how the fees work is, if I show up to the table and I have Hex and I want Maxi, right? Then the thing I have to pay with is what I show up with, right? So I show up with Hex and I want Maxi, so I pay with Hex. So the fee, most often, it's variable, but like it most often is 0.3%. So I'm going to show up with 10,000 USD value worth of Hex. I'm going to pay 0.3% of that as a fee. Now, somebody else, Stoic, shows up on the other side and he's like, hey, I've got Maxi and the premium is really high right now, and I'm going to swap over to Hex, right? So he shows up with 10,000 Maxi or 6,000 or 50,000 or whatever it is. And he goes through and swaps the other direction because he showed up to the table with Maxi. He pays the fee in Maxi. So whatever token comes to the table, that's what the fee is going to be in that direction. So when you provide liquidity, you earn fees in the 2 assets, right? So if you're like, I have a portfolio of 4 assets, USDC and 3 volatile assets, and I'm going to continue to DCA into these assets on a weekly, monthly basis. Like, it just doesn't make sense to me to not take a small portion, even if you just want to learn and grow as a person, and put these into an LP position to earn more of the things that you already have and like and want. Do you know what I mean?
Well, is there having 10,000 hex is different than having 100,000 hex to put up for LP, right? Like, what is, if somebody just new getting into it and they say, hey, I want to put part of my bag, or I have some set aside that I want to try to earn fees for, is there a minimum that makes sense for the average person, or outside of learning, like, hey, I guess even with passive income, say I want to make passive income with that, is there a certain number or dollar amount, a certain number of tokens that would make sense for providing LP?
I think that, like, for the everyday type person, like, the biggest thing that they could probably focus on is trying to get their income up in, like, real world. Like, whatever you do for real world, like, start a side hustle, like, figure out how to get into sales, figure out how to grow your income, figure out how to improve you as a person, because that's, like, the best investment you could possibly do. But if you're like, hey, I have some capital, I'm going to continue to focus on myself, but I want to start learning LP. If you're on Ethereum, I mean, you could do it with $100, but when you adjust a position, you pay 3 fees. So, like, say you have a position set up and it's tax and maxing here, and you have a range, which we can talk about in a moment. Say you have this range set up between these two lines here, and the price of the ratio between these two actually shifts, right? I'm gonna try to click the line here, but I don't know if it's gonna let me. This price here shifts, and now it's outside of your range. So that means you're not earning fees and you're all in one asset. So what do you do if you're all in one asset? So first fee you pay is to pull up your fees and your position. So you pay 1 fee there. Then you say it's all in hex, right? So you're all in hex. So you're going to, like, okay, I'm going to convert about 50% of the hex back into maxi so I can set up a new position, so then I can re-put this in the middle of the range, right? And you pay another fee to do that. But now you have, say, 50% hex and 50% maxi. And then you enter into a new smart contract to place those two assets into LP, right? So you pay 3 fees there. So when you think about, like, what's the minimum somebody could use to provide LP, if you have $100 and it's, say, $7 for the first fee, $7 for the third fee, and because it's a smart contract with 2 assets where you're putting it into LP, that fee tends to be a little bit more. So say that one's $12, right? So you've paid $26 in fees, right? You pay 26% of your entire bag in fees. It takes longer to earn that back to be profitable. Whereas if you have the capacity to put in, say, $2,000, you could be profitable within 24 hours to 48 hours, depending on the range and the volatility, or basically the trading volume on there. Stoic, what are your thoughts on the minimum amount? Or if you
Sam, you're exactly right to identify that the thing that's going to hold you back with small amounts of capital is the amount of fees that you're going to have to pay. And that's one of the risks with being an LP on V3 as opposed to V2, is that if you don't watch the charts, you can get ranged out, which is what Sam was talking about, where you wind up with one asset as opposed to the other. And that just means that you do actually, it's not quite passive income in a sense, right? V2 is passive income because you don't have to watch it. You know that it's going to sit there at a 50-50 ratio. But V3 isn't passive in the same sense unless you pick a very wide or a full range. You actually have to watch the charts. You actually have to be engaged in them. You actually kind of have to look into capital flows and how people are trading. You should probably learn about sandwich attacks and things like this because there's a lot to it. So I don't want to give the impression that V3 is a cruise, right? It's not. You do have to watch those charts in order to be effective at it.
Hey, just want to hit impermanent loss while we're here too. Just or any other risk you can think of, for the intro to LP. So, what is impermanent loss? How can it happen? And when, are there pairs more risky or more prone to it happening? You getting one side you don't want, all that stuff.
Stoic, you want to talk about impermanent loss? I have, I think might be a little bit different than, like, what a lot of people think of impermanent loss.
So with Uniswap v3, which is what we're talking about, right? Like, it's important to recognize what Sam was saying there, which is when you start with one asset or a combination of two assets and you go to the top or bottom of your range, effectively what you have done is you have sold your asset, the one asset you held, for the other asset that you held over time. So use an example on a range, right? Let's say we were talking about the HEX price and the HEX chart between HEX and USDC. If the price is 10 cents and I have half my money, or I have all my money there, but 50-50 split, if the price goes down to under 5 cents, effectively what I've been doing over time is buying HEX with my USDC, such that now when I'm at 5 cents or below, I now only have HEX. Similarly, it can be a sales strategy if you're trying to get out of HEX or another asset, that if you put it on at 10 cents and it goes above 15, now suddenly you're at a point where you only have USDC. So frankly, from my perspective, like, one of the ways that I use this is to avoid having slippage on any sort of DEX order. Because if you just pick a range and you're patient enough, you can actually sell off your asset over a range, and it means you have no slippage. And in fact, you're not trying to execute an order at a specific price unless you do limit. So you wind up with a better order execution too. Impermanent loss is really the difference between what you would have had if you had just held the asset as the price went up, as opposed to what you hold in terms of your USD value by being an LP. And so a lot of people like think really hard about impermanent loss, and it worries them because they're like, well, if I had just held the asset up to 15 cents, then I'd have HEX and I'd have it all at 15 cents and I'd have more money and it could go higher. And right. So that's definitely a concern if you're worried about that. But if you recognize that you're selling the asset in the range or buying the asset in the range, then it's not impermanent loss. It's just you being a DCA. It's just a DCA strategy where you're going up and down. That's my perspective on it. Sam, what do you think?
I think of it as like an opportunity cost. I don't remember if you were married in any of the conversations, Stoic, or Max, if you have a girlfriend or a wife. But I have a girlfriend. She's amazing, right? But I could have had a different girlfriend. So like if I chose to dwell on the fact that there's a hot girl at the gym that I could sleep with, right? If I chose to think about that, I'm like, fuck, I'm with my girlfriend, right? That's an opportunity cost. And when you think about, like Stoic was saying, you recognize like what it actually is. Impermanent loss, if you think about it like asset A and asset B. Asset A goes up by a 10x over some period of time, and asset B goes up by a 3x. So during that time, if it was 6 months, right, what's happened? People have bought the asset that is going up in value from you, meaning you have less of that. And the assets that's only done a 3x, you have more of that. So if you look at your portfolio, you're like, okay, I had $1,000 and I could have had a 10x on that if I just held asset A. I held a combination of A and B, which means that part of my portfolio went up by a 10x, right, during this time. And part of my portfolio went up by a 3x. And during that whole entire time, I was earning fees along the way. And there's multiple different strategies you can utilize these fees to reduce the risk or perceived risk or the opportunity cost of putting money into LP. Now, the example Stoic was mentioning, let's say we're going to use $1,000 here for LP. I think personally, I like the minimum, like if somebody's doing it, is around $2,000 because depending on what the fees are like. But check, if you guys can, it's probably hard to see if you're watching on your phone, but they're split between HEX and USDC, right? So if you look at the chart on the right, the green line at the top is the range in which you're selling in, and the green line is the bottom is what the range you're selling in. Right? That's going to be where you choose to buy and sell your USDC for HEX, back and forth. It doesn't matter which direction people want to go. You're like, I will earn the fee from that, right? Sam's coming to the table with HEX and he wants USDC. I'll sell him that and I'll earn a portion of the fees, right? So check these numbers here, right? Where HEX and USDC. Watch what happens as the price changes, right? It comes down towards this bottom range And we went from $900 in USDC to now we have $1,700 in USDC. And then say it comes down all the way out here. What do we have? We have $2,000 in USDC. And then 7 minutes later or 4 days later, say it swung back and goes over here. Now you're all in hex. So that's effectively how you can think about what impermanent loss is. One of the strategies that I like is thinking about it from a coin count perspective. So say, for example, in this example, we're $2,000. When the price is in your range, if you chose this specific range, you're earning about 8% a month, right? You're earning $150 a month. Cool. Well, what if you took your $150 minus fees and you decided to buy the asset that you wanted, right? So say if you want more hex, right? You have another wallet set up. You take your $150, say you earn that, you pull that twice a month, right? So you pull $75 and then you pull $75. So one way to think about this is you can use LP as a way to increase your DCA into any asset that you like. So Stoic, you had an example. I don't know if you want to share it here, but I think GRC said you shared it in Spaces of how you use LP.
That's the question I was going to ask too, which is how, a lot of people have been talking about how, instead of doing market buys and limit buy and trading like that, using LP to gain positions, which I think is what Sam's alluding to.
Yeah, I've only got 1 minute until I got to jump off. I'm sorry, guys, but yeah, I appreciate the opportunity. Yeah, something I mentioned this morning is that I run a huge portion of the budget of our business off LP positions. And I sort of went to our employees when they first started with me, or when each one starts with me, and said, you can get paid on chain or you can get paid in the real world. You guys decide. If you want to get paid on chain, pick the assets you want to get paid in. I'll LP them for you. And that'll mean that I can just pay you largely in fees. Every now and then you've got to dip into a little bit of principal, which kind of sucks. But you've just got this much better way to preserve capital that allows you to be paying people in your organization all the time, just off sitting there in LP. It's fantastic. You don't quite have that same flexibility in almost anything else, right? You don't have that flexibility by buying a new car for the business or by renting additional office space or anything like that. But if you keep it in this one sort of fashion, then and you're smart about it, you don't overcommit to any one pair, you can do really well with it for your organization. So I like holding capital in that way. I think it's smart. I think it's efficient. And for us, it certainly works. And as long as you have people who want to get paid in your company in that particular format, then it works really well. Anyway, sorry. I appreciate it, guys. I got to jump.
I appreciate it. Thanks,
Great to see you, Stoic. Have a great night.
Cheers, boys. Thanks.
So you had mentioned like using it to enter into a position, right? That's where you're kind of getting at?
Yeah, I've talked about it a couple times with Access too, of just thinking of, and I know this may have happened with, I thought there was a conversation that if Stoic had more time, maybe we would talk about, I think it happened for Weight. There was a bunch of liquidity that went back and forth. Actually, I'm not sure if it was used to sell or not, but I think there have been people using liquidity positions to get another coin that they want out of another coin instead of doing market trades. So what do you know about that?
So like this is a real world, this is actual data, right? So this is the Hex USDC pair here at the 3, and you're in the pool of the 3% because you can do a 1% pool or like 0.1% pool. Like there's multiple different pools, but this is the pool that we're looking at right here. You see this little spike of a line here, right? Or this one over here. Mm-hmm. You can think about both those as range orders. So with V2, you have to put 50% of A and 50% of B up there. With V3, this position over here is all one asset. So you can do single-sided staking in V3. You're not going to earn any fees doing this, right? Because it's sitting outside of the range. You only earn fees where the pink line is, right? So the pink line is right here, you're earning fees. If it's over here, you're earning fees at this spot, right? So that's why the capital efficiency of like the chart was like this versus a straight line, right? Because people like want to earn more fees. Like, why keep your capital on either side when you don't earn any fees? Why do you put it closer together? You earn greater fees, right? So if somebody wants to enter into a position, they could do a single-sided stake, right? So say this was HAX, or say this is USDC. So what happens when the price goes from here to, well, it won't actually go through there, but let's use this other one right here. Let's say it goes from here to over here, and they have HAX, right? And they want to sell their HAX, right? But they've got 6 million HAX, and they don't want to pay slippage, right? They don't, like Stoic was saying, you don't want to pay slippage. So if you guys don't know what slippage is, it's probably the most expensive cost you pay if you use Uniswap and you use like any dollar amount above, a grand or a couple grand. The slippage can be, 1, 2, 3, 5%, right? And if you have $10,000, 5% is $500, right? You pay an Ethereum fee of $10 and you pay the 0.3% fee here, but the greatest fee you pay is in slippage, right? So people don't like to pay slippage, right? So you could set this single-sided stake up as just HAX, and then you're like, I think the price is going to come down, right? So let me pull this up so you can see it. So this is where the price is, but you're like, FTX shit's going on, right? You have this other stuff's going on. The government's incompetent. There's all this crazy stuff going on. I think prices are going to come down, right? So you're like, you set it up all as HAX. When it goes from here to here, you have effectively traded all of your HAX for USDC and sold your position without any slippage and earned fees while you did it. So you can effectively eliminate slippage and earn fees at the same time. I actually have a developer who is building me a bot to do this automatically, because one of the features that Uniswap should have, I don't know why it doesn't, but it should have this. You can think of another way of a range order as a limit order. It's effectively a limit order. People think V3 don't have limit orders. It's just because they don't understand the system. This is effectively a limit order, except for a limit order, you still have to pay slippage. With a range order, you don't have to pay slippage and you earn fees in here. So I have a developer creating a bot for me. The script is going to run that allows me to exit this position. So one of the things that happens when you have LP set up is that in V3, you get to see your position, and then below that, and we'll try to pull up an example after this, like a real world example here.
Okay.
When you have that, you have your position, and then you have the fees that you earned, right? And if it goes from, say, right here to right here, and I've sold my position, now I have to manually go in there and press exit or remove liquidity. And remove liquidity, right? Then you get your treasure or your ledger out, right? You punch in your shit, right? And then you leave that position. But what happens if the price goes from here to here, and I'm out at dinner, right? So I'm all where I want it to be. I get back, but during the time on the way back, it's come back to this side. Then I effectively have not sold my position. I'm back into HEX again. I did earn fees from both of those run-throughs. Each time the price has gone through this way and then through this way, I earned fees both ways, right? But I didn't get out of my position. So the script, the bot that I'm having written, is going to automate that process so that people can pull, maybe I'll sell it, I don't know, but pull their position automatically, because it's a big issue. Like, maybe not for people who don't understand this shit, right? But anybody who uses V3 in the way that I use V3, or the way it appears that Stoic uses it, something like that is useful, because it automates the process instead of you being like at your computer all day and be like, having a second screen up or something and just like, oh, it's out of range, let me pull that before it goes back through. It will make it automatic. So it just does it for you.
Amazing. That I like the way you explain it, the limit order versus range order, and like all the, you don't need to market sell stuff, people. You can use liquidity exit positions if you need to do that. So amazing.
What we talked about a lot of different stuff so far. What about the stuff that we've talked about do you have questions about, or do you think that you don't fully understand, or that like it wasn't clear as I talked about it?
I got a couple questions in the chat that I've been holding off on. So yeah, we'll go there first.
And then we can pull up the real world, and then also how to find some of this information too.
Absolutely. TB Bishop, is a 10K V3 position on Ethereum much different from a $100 V3 position on Polygon QuickSwap?
So on Polygon, QuickSwap, you get V3 over there too. The reason that V3 is just way better, one of the several reasons V3 is better is because you can earn higher returns on there. So if somebody has $10,000 on V3 on Ethereum, they're going to pay higher fees than they do over on Polygon. However, if somebody, in the example earlier where I said $2,000, if somebody, a lot of people don't know how to get to Polygon T-Bishop, so that's why I didn't mention it, but I know that you've been paying attention. So if somebody does have $100 or $200 and they want to provide liquidity with a couple $100, Polygon V3, and I personally way prefer V3 over V2. It's just like you could put in $100,000 and I could put in $20,000 and I can earn more fees because you're in V2 and I'm in V3 because of the capital efficiency of allowing me to set specific ranges here. So if you want to go to Polygon, you can do it for $100 or $150 or $200, way easier than you can on Ethereum because the fees are so much smaller. But then you have to, at least have some understanding of how to get to Polygon, the token over there, and then another token that you want to provide between, right? And maybe it's simple as like Matic and USDC or something like that. But those are some things that, like, if you are a beginner, might be challenging. Like, you know how, like, if you're doing something for the first time, it tends to be challenging for some people. Yeah. So good question. But basically there's going to be no difference in terms of, like, the trading volume is going to be different and the fees could be different. I don't know if QuickSwap on Polygon charges a different fee, right? So if fees are lower and trading volume is lower, you're going to earn less, right? But then again, fees could be higher and trading volume could be way higher, right? Because the fees are less in terms of the Polygon network.
Gotcha.
So good to see you, T. Bishop.
UFO, what's a good yield return on investment per month farming?
I like to think about this more so of, like, do you have the time or you have a job where you sit at your computer, right? Because I can earn 30% a month, but I sit at my computer. I have this computer here and I've got another computer sitting next to me, right? That has LP on it, right? So I can do whatever, like, it's just on the corner of my eye as I love trying to go to the bathroom or go out in my office. I can, if it's out of the range, I can just adjust it, right? But that means that, like, this range, one way you can earn higher returns, right, is by narrowing this range in here, right? These things here. And you set this up on, like, actual Uniswap, which you can get into in a second, right? So in this pair, Hex USDC, you can, this specific range, right, between these two green lines is about 12% per month, 13% per month. Right? Like these are like way more than your 30% annually in Hex, right? But if you're not sitting at your computer or you work 12-hour days and then you come home and spend time with a wife and kids and you know what I mean? If it goes outside of this range, you would want to generally adjust this position. So if you work like a regular job or something, it might make sense to do a little bit wider range, but then you're going to earn less in fees, right? You're going to earn 4%. Annually, still fucking amazing. I mean, per month, still amazing. Still a great return, right? 4% a month. But then your money's working for you, earning fees. You don't have to think about adjusting it. You might have to adjust this like once or twice a month versus if you do a very narrow range, maybe you have to adjust every other day, right? So that's
what happens if you don't adjust.
If you don't adjust and say the price goes all the way out here, then you're going to be all in Hex and you're not going to be earning any fees.
Gotcha. Another one from BRS. Is it really easy to track the value of your LP on V3? Is there an easy tool for looking at your value on V2?
V2, I have provided liquidity on a couple different dexes, and I have not found an easy way to track it on V2. It's just not as good in several ways. Like, you don't get as much information. You don't get the capital efficiency, meaning you can earn higher returns with V2, and you can't track your returns. You just can't do it. The advantage of V2 is that you don't have to adjust it if you think about that as advantage. I think of it as advantage the other way, right? But your income you're earning on it is automatically reinvested. But V2 in the one sense is slightly more complex because most V2 will be something like Pancake, where you provide liquidity between two assets, say BNB and Cake, and then you earn an LP token. This LP token, then you take and you can farm it, right? So you can earn returns on both sides, but there's no good way to track it. On V3, it comes up and it tells you, this is your portfolio value. This is how much you earned in fees. Would you like to pull some of your fees? Cool. You could pull 3% of your fees, right? Or you could pull 50% or 100% of your fees. You can pull fees whenever you like to pull your fees, or just leave them there, right? Your fees are not going to be compounded as in like adding back into the pool to earn more fees unless you manually do it. But V3 is so much better from an information standpoint. Way, way, way better BRS.
Awesome. Let's see. The question here from UFO. What's going to happen when the AMM bot starts vampire attacking liquidity on the ETH chain after Pulse launches? Will this affect farming yield on ETH?
So there's with PulseX, right? Because this is where it's all going to take place. The AMM bot is going to effectively go around and trade on all the copied dexes, right? So Ethereum V3, right, is going to be, Uniswap V3 is going to be copied over to Pulse. And then going to run the AMM bot, right? So it's going to effectively sell some of that shit for Pulse. Anything that's related to ETH at a ratio of like 1 to 1 million or 1.2 million or something. And then bring it back to PulseX. PulseX, though, is only V2. So in the long run, PulseX has to be V3. Like when you have something that like V3, where it is so much more capital efficient, it doesn't artificially force your liquidity like a straight line, because that's not normal. Like we pull up, this is the actual liquidity. A good example is one with more liquidity, say Ethereum and Bitcoin, right? Wrapped Bitcoin. So when I say an efficient market congregates at the price, you can see this is real data. I'm not just saying this. This is how the actual pair of wrapped Bitcoin and ETH looks, right? They congregate the market. PulseX is V2, garbage, right? Like that's like you have to put 50% of this asset, 50% of this asset. Like not ideal, right? There's going to be a V3 front end. Go ahead.
I was just going to say so far we know PulseX is going to be V2. Assuming PulseChain launches before V3 is available, which is that May 2023.
I believe so.
Man, this May joke is going. It's got legs. It's got legs right now. Mid-May, it's still got legs. I wonder, is it just going to be a temporary thing? Where is that kind of, you think that's Richard's plan too? Like, okay, as soon as V3 is available, we're gonna assuming PulseChain launches before then, do V2, and then hey, PulseChain just got an upgrade. Check it out. We're gonna market that now. Now you got V3 as well. You think that's going to happen, or how do you see it playing out?
So I think there's a couple options here. Richard Hart, many videos, really likes V3, right? He's talked about really liking V3. QuickSwap, which Bishop brought up a minute ago, put forth something in their DAO, and they purchased the license to V3 for about $350,000, right? This is what they said in their post. So like, if you raise $1.9 billion, right, and this is a clear, gigantic innovation that is so much better, like to me, owning a couple of businesses, it makes more sense to just pay the fee, right? Or try to come up with your own version of this so you don't have to pay the license, right? Which you think like, okay, remember that feature? I was like, I'm paying a developer to actually create this bot for me, right? I should have contacted you. But that maybe that is a feature that's actually in the V. Maybe he can come out with his own version of V3 on there, right? Because if you were like, okay, well, maybe he comes out with V2, and then when V3 is available, then they change to V3. But then you have the incentive token, right? Which is, you don't need that in V3. So like if you V2, because it's 50-50, you can represent your position in that pool by a percentage of the total, right? Think of like Hex, right? So when you stake, you own a percentage of the totality of staked Hex, right? In that pool, represented by something called a T-share, right? So when you do this on V2, it's called an LP token or incentive token on PulseX, right? Or cake on PancakeSwap. On V3, I could set my position up as this. You could set yours up as this. Somebody else could set it up as this. Somebody else could do like something like this. So because they're not fungible positions, they're not the exact same position, right? Like they're represented by an NFT, right? Because NFT, non-fungible token, meaning that there's a slight difference in all of them. So and if you look at this, right, the ratio right here is 0.0784, blah, 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 right? And over here, so most of these positions are different. So the NFT you hold for your position is going to be different. So what happens from a community standpoint, from a confusion for users, but because if I change stuff in my business all the time, it confuses people, right? So if I have V2 and then 2, 3, 4, 5 months later, I change to V3 and the incentive token is no longer needed, or maybe there's some other creative way that I'm completely oblivious to, that could be 100%. I think that a lot of people don't fully like understand DEXs and LP and the tokens involved, that could create just more confusion and mistakes and easy ways for manipulation and stealing to happen, versus maybe it is better to actually just wait until afterwards.
But isn't that what happened with Uniswap, where, I mean, they had V2 and then now they have V3 and now you can switch between both. So I just, it seems like that would be the play in my mind of, hey, now you can say PulseX got an upgrade. We have more, that's the more stuff play. Otherwise, yeah, I mean, it's more cost effective other than buying it, and you can still keep incentive token, which may be, hey, if you want to earn incentive token, use PulseX V2. If you want to, be more capital efficient and do other things, you do use PulseX V3. That's the more likely scenario I can see in my mind.
I agree. Now, here's the thing. So say that takes 5 months, right, for that to play out. Hypothetically, 2 months, whatever that time frame is, right?
Sure.
During that time frame, I've said multiple times that I'll just be using the front end for V3 on Pulse, right? Why would I provide liquidity on PulseX if I can earn a higher return on V3?
I guess incentive token would be the reason.
What's that?
I guess incentive token would be the play for that, I guess.
But we'll have to see the semantics of that. But if I can earn, if you put in 100 grand into PulseX between, say, Pulse and Hex, right? And I put 100 grand into V3, Pulse and Hex, right? And people understand that like it is a massive innovation. Think of like flip phones. Not many people use flip phones anymore, right? So like there's a smartphone, right? And people switch to this because this is so much better and far more capable of a device. That's like V3 versus V2. So it has to switch to this at some point. And if Uniswap is like, okay, cool, we see $1.9 billion here, and they like think, and they start supporting V3 on Pulse, right? That could be competition. If liquidity drains back over to this other side, because it's just going to be free tokens, right? So people could take the free tokens from PulseX where they're not earning as much fees because it's artificially making your capital less efficient and moving back over to V3. That could be a possibility. If it happens over the course of a long enough period of time, the quicker that's going to happen, because flip phone versus smartphone, right? You're like, you want to use a flip phone? PulseX. You want to go to the smartphone? Go to V3, right? So that I think the faster it happens, the better it's going to be, right? Or maybe he can come up with like their own version of V3 that is done differently, that doesn't affect the license, or wait for the whole package to come out after they can get the license for free. I don't know, but I think it would be really, 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 really good for PulseX to have V3 off the jump.
But how could is there a way the OA could will it to be, for it to make sense to use V2 and then make the transition easier to V3 if that was the case? We have 2 or 3 cases we talked about on the table for it to happen. But let's say, we just launched with V2, we get V3 later on. Could the OA, somehow incentivize people to hey, this is going to be the premier place to do it. You don't need to use V3 because we've seeded the liquidity really well, or done something other to make it attractive, or more attractive to the ecosystem at that point.
Yes, in the sense that users are going to go where like there's liquidity, right? So if all the liquidity is in one spot, that's where users tend to go, right? But on the flip side of that, if you play liquidity or you play around in that arena, it doesn't always make sense to provide liquidity in areas where there's a lot of liquidity, because then I have to share my fees with you, right? So it could vary, but yes, there's that, and I'm sure that there's plenty of things that I am not aware of that could be done, or utilizing the incentive token to maintain liquidity over there, because it makes sense. He wants the a slice of the pie, because he understands liquidity is very, very important. And if you can earn a slice of the pie every single trade, right? That's what he wants to do. So he definitely has an incentive to do that. And I'm sure that there's things that you can do when you have $1 billion+ that you can't do when you're a little fucking peon, right? Like the size of the shit that I have is nothing, like literally nothing in comparison. So I think that you have access to play different strategies that I'm not capable of seeing because I'm not there yet. Do you know what I mean?
Yeah. I'm glad we have a billionaire genius founder, because I imagine he's got a whiteboard, all these different plays are on the table, and he's just like, all right, here's all the best plays. There's no losing plays, only winning. Let's make the most winning ones. And man, I'm excited for next year. I don't know, everyone's like, oh, bear market blues and all this stuff. I can't be less excited. I mean, I can't be more excited. It's fun. That's why I like talking about this stuff. This stuff keeps you in. It keeps you motivated. It keeps you like doing cool stuff. So that's what I like about it.
No, I agree. I don't know. I think I'll get re-engaged with Pulse a lot more as we get closer to like the launch of things. I think there's just so many cool things that are happening that I've been like looking into here, there, and everywhere. But I'm definitely excited, and I would love it to be V3. I'd love it to be V3. If it's, a different version of V3 that they create of their own, right? Where you can use your capital in an efficient way.
I think the ideal, prioritization would be one launch, right? Don't want to delay V3 for launch. Like nobody's voting for that one. But an ideal scenario too is, we're able to get V3 in at launch and not delay anything. And I guess the other one would be, I still think it's going to happen that we're going to have V2 and then V3, but who knows if we're out to mid-May and we haven't launched yet, then V3's right there. I'm sure Richard's got a plan for that too.
I think that it's going to be after May, personally. Do I have any data or inside information? No, but I think that V3 is super valuable. And if you understand V3 and then you're like, well, we can make this better about Pulse. 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 And we get the added benefit of waiting a little bit longer so we can get this license. Like, or create our own version of a V3. I don't know. Seems like I'm not counting on. I think that after May is probably a good idea, right? Not a bad idea. I want to show how to actually do this if people are interested, and then where people can get some information.
I'm gonna throw this question up just in case you can. It's related to this. I don't know if it is or not, but junior belter, in the event you come back to your LP position and you're out of range, what is your thought process? Oh, maybe not related.
The thought process is like, oh, I mean, it takes 3 minutes and adjust this. Basically, right? It's like, okay, I come check my position first thing before I go to the gym or anything in the morning, or when I come to do work, I'll check that before I start some work. And if it's out of range, I need to take the 5 minutes and just adjust the position. That's about it. It's a simple process. The first couple of times you do it, it takes extra time because you don't know what you're doing and you want to play it. You know what I mean? You're just checking everything 2 or 3 or 4 times to make sure you're, paying attention, knowing what you're doing, what are the ranges you're going to put it in, et cetera, et cetera. But once you do it a multiple time, you could have 2 or 3 different types of positions, and you could be like, okay, cool. In this pair, I'm earning Hex and Maxi, and in this pair, I'm earning Icosa and Hedron, and in this pair, I'm earning USDC, and the USDC I'm taking out to live on, right? Have you ever heard of FIRE, the financial, like, what is it? Financial independent, retire early or something like that?
Yeah, financially independent, retire early, yeah. Mm-hmm.
So have you ever heard of the Trinity study?
No.
The Trinity study, I think it was done in Texas. And it's like Trinity University or something like that, where the university or these professors, they wanted to see how much you could safely withdraw from a portfolio without affecting or touching the principal balance based upon different portfolios of stocks and bonds, right? Because that's what that was around, right? Crypto wasn't around when they did the study. And what they found was you could safely withdraw approximately, it was 3.96% of your portfolio without touching the principal balance, meaning you could effectively withdraw 4% of your portfolio. So
did you say 3.69?
I probably did say 369, but I meant to say 96. I meant to say 96, but
close enough. Close enough. That is canary in the coal mine. Hex is a winning product right there. You said it. You said it. Trinity.
I probably did say that. So what that information effectively gives people, because people are like, they think about retirement and then they literally have no idea on how to do that or how much money is going to be needed. Well, if you take the findings from the Trinity study and you apply it to like a scenario, you're like, okay, if I need $40,000 to live the life I want to live, right? From my investments, right? That means you have your free time to do whatever. You just get $4,000 per month or what, $3,600 per month or whatever. And that's $40,000 a year from your portfolio. You could take that time to create more income or do other stuff, right?
Right.
What is 4% or what, if you do the algebra, right? What times 4% equals $40,000? It's $1 million, right? So you take $1 million times 4% equals $40,000. So that means you need a portfolio to retire on of $1 million to have a nominal or a inflation adjusted, a real return of $40,000 per year. Now, when you take that same framework and you apply it to crypto, the whole thing breaks because you can provide liquidity on, like, say, Curve, which are stable coins, and earn, say, 3% a month, we'll say, conservatively, right? So if you earn 3% a month and you're earning 10+% a year, then you're like, okay, wait, if I can earn 10% a year and I need $40,000 on that, then that means I only need $400,000 to retire, right? You need $400,000 bag using LP to print you your money to be able to retire on. And a lot of people are talking about this, but I think this is going to be one thing that people use LP for that is going to change the game, like, completely. Because you can take $100,000 if I can retire. Like, you could take $100,000, earn 10% a month, right? You earn $10,000, you take $3,000 for the government, right? You take $7,000, you put $1,000 aside just for reserve, and you live on $6,000. You're good. Cool. Retired, bro. You know what I mean? And it completely changes the game with finances for people, like when they fully understand this. Hopefully that was helpful to Junior.
Yeah, that's an interesting study. I have to check out the Trinity one.
So if you want to set up an LP position, sorry, were you going to say something?
No, I just I was posting the demo time comment. Yes, let's go.
Okay, so this is like a wallet here. So I don't know how much money I have in here, so I don't know if it would be enough to actually pay for fees. But this was a position that I opened up in a demo for a different one, where it was USDC and ETH, right? And it's a closed position. Oh, actually, let's see. So this is what it effectively looks like. Perfect. Because I don't think I have money in this wallet here. Let me check if I have enough here. Switch to this account. I have $10. So it's highly unlikely I'm going to have enough money to do 2 or 3 transactions to set this up. So we're going to take a look at this. This is what it looks like. So if you set up an LP position, this is what it's going to look like when you get to Uniswap, right? So you click pools, right? You come over here. If you have a live position, it's going to show up right here, right? So this one's closed, as you can see over here. But if this was live, this would be green over here. You click on it, and you could have multiple positions here. You could have 5, 10, 15 different LP positions here. So you click on it. This is your NFT here. And it is a representation of the range and the dollar amount that I put in, or not the dollar amount, but the quantity of USDC and the quantity of Ethereum that I put into this pool here, the 0.3% pool. In this example here, it just says increase liquidity, right? So if I wanted to create this again, but when the pair is live, it'll have a blue button. I'm looking at my screen. It says increase liquidity, or it says remove liquidity. That's going to be up here. Down here, they're going to have another button right here. It's going to say claim fees. V2 doesn't have any of this stuff. V2 is not nearly as nice, in my opinion. So what this does is, as it swings back and forth in my range, the price, I just earn the fees. I earn 0.3% between these two. If you're in the pool and I'm in the pool, and you have $50,000 in the pool and I have $50,000 in the pool, and if we had the exact same range, then we would both earn 50% of the fees in the pool, right? That's how that would work. The range that I chose was 1,100 to 1,450, right? So this is USDC per ETH. One of the things that confuses people when it comes to providing liquidity is that everything is in a ratio. So this is easy because it's just USDC. So the ratio is in dollars. So it's easy to understand. But if you're doing Hex and say Maxi, it's always a ratio. So it's a different way to think about it. It takes a little bit of time to get used to it. But this means that if the price right here, $1,292, is in above this and below this over here, I'm earning fees. And if you there's multiple different strategies you can take to the fees, right? So you could, every time I get to $100, every time I get to $1,000, depending on how much capital or the pairs you're in, you can pull those fees. And you can be like, okay, every time I get to $250, I'm going to pull those fees, and I am going to buy Hex, if that's what you want to do, right? You can build a portfolio of Hex just from an LP position faster, or in addition to your DCA, right? Because you're earning these fees on here. Do you have any questions or anything that wasn't clear about this?
No, makes sense.
Also, TV Bushup, Sam has a playlist on his channel just on LP. If anyone does not know, those videos are exactly the guide I used and still use. So plug here. Go if you want to check out LP stuff, you want to learn more about this stuff, you want to see several live examples, like talk about it from 14 different angles, like all sorts of different stuff and strategies. Like I have a list of probably like 3 hours or 4 hours of this content, because I find it fascinating, that you can check out on my channel if you're interested.
Yeah, shout out to Sam's channel, an LP guide. If you have a link, Sam, I can drop it in the chat or either way too.
I will get that for you in just a second. Appreciate that.
Of course.
Thanks for having me on tonight, dude. I love talking about LP.
Yeah, no, I mean, we're here to educate the people. So you were one of the people I see it talk about it the most. So I'm like, I definitely want to have Sam on talking about it.
Okay, I'm going to share this in the private with you.
Yeah, I'll post it.
The playlist, and there's probably like 12 or 13, 14 videos, somewhere between, a couple minutes up to, 20 minutes to an hour and a half for those.
Yeah, I got a question from UFO. Can you LP backward from the market top as it sells down for months?
Yes, sir. Yes, you can. You can do either direction. So if somebody, I like to think about this, if somebody wants to start getting into LP, understanding impermanent loss. So getting, like I built out like the formula, there's an AMM. There's a reason it's called an AMM. It's an automated market maker. It's a, algebra formula, X times Y equals K. So you can build this out and you can plug different numbers in and actually see how it works. There's calculators online that can help you do that too. To really get a grasp of like what is happening. I mean, I like to understand what's going on, right, with it. And as you do that, think about the percentage of your total portfolio that you want to put towards income generation, right? If you're, I think a decent amount is somewhere between say 0 and 20, 0 and 30% of a portfolio, depending on the size of the portfolio and the person's like objectives, what they're trying to achieve, right? But everybody's risk tolerance is different. So I'm not like a financial advisor. I'm not telling you what to do, but those are things that I think of as a intelligent or thoughtful way of approaching it, because you probably don't want to put all your money into an LP position. Maybe you do. Maybe you're just starting out and you're like, I'm going to do this and I'm going to use the fees to build up a position in something else. Maybe you do, right? Maybe it does make sense for you. But I think for the broader majority of people, probably doesn't. This is Sam.
Stolt only owns tank top.
Brazil. I'm sitting here in this, sweating my balls off right now.
No, you're looking good though, man. You're looking good.
Thank you.
I had another question here from Bigfoot. What happens when the price falls out of range?
You don't earn fees.
Yeah.
And so like let me see if I have that thing still up here. I can switch this back over to it. So when you set up a range on V3, and if the price goes outside of that range, like it is here, right? If it's out here, now you're all in, say, whoops, just trying to highlight hex here. Now, say you're all in hex, right? So you're like, okay, cool. I don't mind being all in hex, but you're not earning any fees, right? So if you decided to allocate 10% of your portfolio to providing liquidity and using those fees to pay your bills or build a different position or whatever it is that you want to do, right? Then you'd want to adjust this. And we went over that, right? So you have all hex, you need to sell a portion of that hex into maxi, right? That's one step there. And you need to, or you first pull your position, right? Then you'd sell it, convert it, and then put it back. We covered that in detail a little bit earlier.
Yeah, rewind if anyone has a question on that. I know a few people showed up in the last 20 minutes or so, but yeah, Sam went through sliding all the ranges earlier. Very, very cool.
Yes. I think I was actually pulled this up and showed this in the wrong screen.
Says, what in the abuse salute frick is going
on? What's up, GOC? What's good, bro? Hope everybody's doing well. Hey, Sandy's in here.
Yeah. Sandy Beach is here. Yeah. What's up, Sandy?
Hey, what's up, girl? I haven't seen you in a while, so good to see you here.
Hex Huddle. I know I have been posting comments for a while because we've been blazing through the charts. So yes, chat. Good to see everyone. Yeah, get your questions in. Probably we'll be wrapping up in not too long, but Sam's got a few more things to show, it looks like. So we'll go through that. And I'm just soaking it in, man. I'm soaking in. It's good stuff. I'm glad you brought it up.
You're gonna provide liquidity.
I've been thinking about it for a while. Another benefit to having these streams is, I get to learn. When I go back and clip, I get to actually like consume and take it in a little bit deeper. and not have to, mod the chat and all this stuff. But I've thought about it. I don't know. Maybe that's a good question too. Is there a good or bad time to provide it? For example, is a lot of volatility times good? Is the bear market better than the bull? What is your take on that? Is there some sort of market condition that makes it LP? Oh, we're going to have a lot of people providing LP in this market condition or otherwise.
Ideally now, right? So if prices are not like, what is impermanent loss? It's impermanent loss is like asset A, asset B, asset A overperforms asset B, or asset B underperforms, depending on how you want to look at it. Then during those times is what people think of as impermanent loss, right? So if psychologically somebody's not used to investing, if they're scared of impermanent loss, they don't fully understand the pieces of it, doing it at a time now where the market's just sideways and choppy, this is like ideal, right? If it's going up, then you're going to deal with more adjusting your position as well as impermanent loss, right? But if you do an intelligent strategy, then it's going to be somewhat, in my opinion, somewhere between 0 and say maybe 20, 30% of your portfolio to put it in here. Wow. One way you can go through here and find information. So this is info.uniswap.org. If anybody wants to check this out, you can search, right? So we search for Hex here. We can pull Hex up. It gives you the volume, the TLV, and the price, right? And then we come down here, we get to see the pairs. And one of the interesting ones that I want to point out here is the Hex-Hedron pair here. So I think this is the right one. Okay, yeah, perfect. Okay, so this is the Hex-Hedron pair, right? So then you're like, I don't give a shit if I have Hedron or Hex. I like both of those things. So I'll provide liquidity between both of these things. Now, you're not necessarily going to earn as much fees as you would in, say, a USDC pair or an Ethereum pair because there's barely any volume between Hex and Hedron, right? It's more so if the ratio is off, a bot is going to correct it, right? They're going to. So if you look back here, these are all pairs with Hex, right? So one way to think about this is there are 10, and this is one of 5 pages. So there are, on this page, there are 10 different prices for Hex. So the opportunistic person or the bot is going to go through and buy the cheapest on here and sell the most expensive, which will happen in this, right? That if there's a ratio off somewhere, the bots will do this, or if there's overflow, meaning if somebody's going to sell or buy $1 million, a million Hex, right? But the one pair doesn't have enough liquidity in it, there's an auto router in V3. So this will route you through V2 pools too. So you had talked about like V2 and V3, like you could just implement PulseX with a V3, right? Version. So there's a router on here. I think they came out with in December 2021, where if there's not enough liquidity in there, or if it's appropriate for whatever reason, the routing of your trade will go through a V2 pair if it provides better price execution for you. So that happens, and you can earn fees. They're just not necessarily going to be as much as they would be if it was, say, a exit liquidity pair like Ethereum, like USDC, if it was paired with Tether or things like that, where you can get out of the asset. But one of the interesting things that you look at when you understand this stuff is you're like, okay, the TLV, the total value locked here between Hex and Hedron is $2.35 million, right? So this is going to fluctuate in 2 different ways. It's going to fluctuate with the prices, right? Because if you have 65 million Hex in here and Hex goes from 2.5 cents to 3.5 cents, if this number stays the same, then the value, the TLV here, will increase because the asset has more. This is one of the 2 reasons why the liquidity grows in bull markets, because prices are higher. That means the value, the TLV locked, goes up in value. The other reason TLV goes up or fluctuates is individuals acting in their own self-interest, because then they're going to add money to this pool or take money away from this pool, right? So if it's ceteris paribus, meaning everything stays the same, 65 million goes up or down based on if I decide to add money to this pool or take money away from this pool. But one of the things you can actually tell when you look at this, right? Because most people don't, they just see TLV of 2.5 million. They're like, oh, wow, that's a lot of liquidity. But check this out. This is where the current price is, the pink line here. Look at this giant block over here, right? So this is a bunch of hex, it looks like, right? That is waiting to be sold for Hedron. And so you're like, okay, 2.5 million from a LP standpoint. I should have led with this. If you want to earn fees, what do you need to look for, right? Some things to look for are the amount of fees generated over a 24-hour period. I have a ratio that I like to think about. And I can pull up Deck Screener after this and show you, but if the ratio of fees over the last 24 hours is greater than the liquidity, that's probably a good place to look at, because then that's like, okay, if there's $1 million of liquidity and there's $1 million of USD volume of in and out, in and out, in and out, in and out between two pairs, then that means your money could work for you really quickly, right? And speed in business and stuff is what allows you to earn more fees. Right? So that's one thing to look for. So if somebody looks at this and they say zero volume over the last 24 hours, because overflow is not going to show up in here from my understanding, and it's got $2.5 million, you're like, okay, I'm not going to really earn anything in this. But when you actually look at liquidity, you see that the vast majority of liquidity is this giant block that's just sitting here not doing anything, not earning fees. So in reality, if this is represented as in the 2.35 million, say if this is 1.35 million, then that means the TLV is actually only 1 million, because most of this is not earning any fees, right? I don't know if this is too far down the rabbit hole of this stuff.
No, just a question on this too, just for people watching. What are those big blue candles?
This would think of it as like, so Richard Hart could do this, or anybody who has a giant amount of money and wants to do this to manipulate prices, right? Because in crypto, remember, it's legal to manipulate things. It happens all the time. Somebody could dump a boatload of an asset here. Say this, I don't know for sure, but say this was if Hex drops down this way. And you're like, well, I don't want Hex to drop below where it was at the, bottom 2 years ago or something, right? Or whatever thing is, right? You're like, I don't want it to drop below this price. So if you look at the blue line here, you can think of this as, say, like running on the beach, right? Sandy, right? But it can still move around pretty quickly on the beach, right? It's not like really thick sand. You can get around pretty easy. This in the deeper blue area here is like trying to run in waist deep water. It slows the price down drastically, right? So if somebody wants to keep the price where it is, right, and they have to have a large amount of capital to infuse, and you have to want to be able to do this, and you can infuse all this capital, large amount of capital relative to the size of the pool, right? So as the pools grow, the number of people who can go through and manipulate them in this fashion decreases. Right? So
these are essentially buy walls and sell walls when you see stuff like
this. Yes, sir. Exactly. But this is a representation that you get to see in a visual, like histogram. You know what I mean? This is, you're like, okay, this is what it actually looks like in real life. Nice. Another thing you can look at is Deck Screener. So on Deck Screener, so this is deckscreener.com. You can go over here and let's just put in Hex. So for Hex, before you click on anything, you can actually just look at this, and it says V3, V3, V2. So I don't even look at the V2 because it's not worth it for me to pay attention to those.
We know your opinion of V2, Sam.
Yeah.
I should do. I should clip out a highlight reel of Sam shitting on V2. It'd be pretty funny actually.
So when you look at this on V3, you get to see liquidity is 6.5 million and the volume is 4.1 million. For Hex ETH pair, it is 1.5 million and 2.2 million. So if you were to look at these two, and this is just all you're like, I don't care. I don't want to do Hex and I want to do USDC, or if I want to do Hex and Ethereum, right? And these are the ones you're looking at. And I haven't looked at the charts to try to understand if it makes sense to do one or the other, because I like to look at the distribution of the asset of the liquidity. But in this case, right, you have $1.5 million of volume generating fees over here versus 4.1 million over here. So this pool is gonna generate more fees, but there's a lot more money in here, right? Where you could actually, I mean, if this was hundreds of thousands, or tens of thousands, you could be a bigger portion of this pool, right? So if we take a look at ICOSA, there's barely any liquidity. ICOSA V3 right here. There's $100,000 of liquidity and $80,000 of volume. Let's assume there's different fee structures, but let's assume this is a 1% fee. I think this pool here is 1%. So that means $80,000 times 0.01. So there's $800 in fees that are paid out to the liquidity providers, 180 grand, right? So if you're like, okay, I could put in 20 grand in there, and my 20 grand represented of a pool of 200,000 now would be 10%. So you're like, I could earn 10% of that money. But this is also very simple in terms of thinking of it as V2, because what you can actually do is compress the ranges, so you can actually earn more than 10% of the total fees in that pool, depending on what the distribution looks like.
Okay.
So these are some of the things that I like to look at.
Is there, just on the liquidity and volume, is there a healthy ratio, liquidity to volume, to tell, give you signs about the market?
From fee standpoint, I like higher volume. From a understanding of what's going on in the market, I like to look at the ratio of what asset is, like in this one right here. This is Maxi and Hex here, right? There's $277,000 in liquidity. If you come down to here, it tells you that 104,000 of this is in Hex, right? So you're like, okay, we know that in an efficient market that is always going to be or trend towards 50% and 50%, right? We looked at Ethereum and BTC. It's just like, it makes just common sense. If you don't believe it, you can go back to that part of the video. And so I don't fully understand how this is going to be affected, but these are some things that I like to look at. It's not necessarily going to tell you the direction of the price in any way like that, but all this data you can't see in V2. So remember, I was like V3, I just keep shitting on V2, right? Well, you can't see any of this data in V2. It's only in V, right? So sometimes you know, like, let's see, Hedron. I thought I saw a funny one in Hedron, I think, recently.
You definitely have some valid points for V3 here. I'm glad you're kind of opening a lot of people's eyes to it as well.
And whatever fucking Richard Hart comes out with, I'm sure it's going to be great. But if it could be V3, that would be better in my opinion. Yeah. Okay, so here, this is an interesting pair, right? Liquidity for Hedron USDC. There's $1.3 million of liquidity in this pair on V3. Of that, which is this is the biggest pair for Hedron. Of that, 307,000 of it is USDC. So what does that mean? That means that the pool is 1.3 million and 300 of that is USDC. So that means that there's $1 million of Hedron waiting to be sold for USDC, right? Not necessarily telling you what's going to happen in the market. You have no idea what price is going to happen, but you do know that has to be sold through for the price to go up, right? But you also, like, I wouldn't recommend trading on any of this shit. Like, I'm not saying anybody should do any of this shit. I like earning fees, and I will just adjust the position wherever the price goes. But these are definitely interesting pieces of information, because say this was flip-flop the other direction. Say this was the Hedron was only 300,000 in the pool and USDC was 1 million, right? Does that seem more bullish than the current ratio? To me, yes, right? Because we know that it's going to trend towards 50-50 over time. And any efficient market's going to trend towards 50-50. So this has to go more towards 50-50 at some point. Maybe that's people adjusting positions. Maybe that's new capital coming in. Maybe the price moves. Maybe some combination of all those things, right? But to me, when I see something like this, I don't see, like, there's a lot more Hedron in this pool pair, or like in what's going on here. So this I don't know if this is true or what happens with the price, just how I feel about this. This doesn't seem nearly as bullish if it was reversed. There was a lot less Hedron in that pool. That seems more bullish to me than if it's $1 million of Hedron versus $300,000 of USDC. And none of this stuff can be seen in V2. It just says 1.3 million, you got 650,000 USDC and 650,000 of the other thing. You know?
Gotcha.
No.
Well, man, wow. Yeah, this is soaked in. This is soaked in, man. It's I think a lot of people are going to enjoy it. I'm going to clip this up, of course, too. And just having the intro in the beginning where we talked through it with Stoic. And then I love the conversation on PulseX, because I don't think it's something people are talking about either, the V3 versus, the different scenarios that can happen. I mean, that's actually, that was like, I didn't even think we were going to get into PulseX, but that was great conversation. And man, you killed it with the demos. Appreciate you coming on, just blazing through and showing people how to do this stuff, because this is the tools they need in order to get into LP. And you put it out there. It's good stuff, man.
Thank you for having me on. I appreciate it. And thanks for everybody's interactions in the comments, and seeing some people that I haven't seen in the chat in a little bit, like T Bishop and Sandy, and a couple other people that I don't remember off the UFO, I think I haven't seen in a while. So thank you guys for showing up. If you guys want to learn more about this shit, like, check out I have a long playlist on my channel, all this kind of stuff. You can hit me up on Twitter. Not that I'm always in my DMs, but like, you can hit me up.
Yeah, I'll throw that playlist in here again real quick. This is Sam's playlist. If you want to check out some of his LP videos and everything. And of course, we'll have some coming out too on this. Very cool, man. Very cool. We'll wrap it up there. Yeah, where can say Instagram, where can people find you? And other than LP stuff, where can people follow you?
If you like fitness related stuff and just like life related stuff, we talk about maybe some taxes as well in there. You check out Instagram. I post on my stories on there pretty much daily. A lot more fitness related stuff over there. And I have another YouTube channel where I cover a lot of stuff related to, say, peptides, biohacking, PEDs, things along those lines. So if you just Google my name and PEDs, or my name and peptides, a lot of those will come up. But I also have a podcast, Too Much Test, on all of your favorite podcast platforms, and I talk about testosterone replacement therapy and things in that realm, if that stuff is interesting to you.
Wait, a question earlier about the mustache, and there was a little bit of conversation just to fill you in. It seemed like, there was a point made by me that you seemed to shave the mustache in Movember, but you kept it throughout the year. Is that an inversion trick you got going on? How does that work?
It helps with the LP gains. No, one of the reasons I like to do this is because I like change, but also if you get more people to talk about you, right, then it's like free marketing. So I tend to change things up relatively often, not because I give a shit what anybody says. In a like cool, I appreciate you, and I think that you like are a valuable human being, but like, There's no, like, I don't need to like create any type of emotional response to like what other people think of things. But I think changing things up for me, I don't know, I just enjoy it. No particular.
Okay.
It was getting a little bit long, and I was like, okay, time to shave it. Let's change it up again. I think I'm gonna grow a little bit of a beard for a while, and then I'll shave that, and hopefully.
You've heard it, everyone. No collusion on the mustache. No collusion.
Hey, you gonna do a mustache?
I don't grow a very well mustache. I grew my facial hair out. I usually keep some kind of shadow going on, but and then for some reason my light's been overexposed. I got to fix it. I don't know why it keeps doing that. So I look extremely white right now, and you can't see any of my facial hair. But mustache, max, not the best max. Maybe one day. Maybe, I mean, if I were going to do it, I guess I'm 30 days late. But I can just take the Sam Stoll to and be like, nope, December, not November. Inversion, baby, inversion.
Could you write a script for like what I was talking about earlier?
I have like more of a traditional dev background, and I've just been getting into blockchain stuff, and I've been working with Python and Anvil, and Dipcatcher's actually been getting me up to speed, him and Sloth. I've been working on a couple of things, and so I'm not there yet, but I do want to do, once I study a little bit more, have some examples, pump out a little bit of code, I want to do a stream on like, here's how to like do Anvil and Python and talk to the blockchain with Web3. I plan on doing that at some point. But I'm still very much in the learning phase on the blockchain side of the dev. So I probably couldn't do it right now, but maybe sometime next year I'll be much more advanced in my ability to do scripts like that.
Cool. I'm excited for you. We need more people. I think that if more people know how to build, whether it's in any one of those coding languages or in Solidity, I think if more people know how to build and more people can do that, then you just have more creativity and resources going into building cool, interesting, creative stuff. And I think that the world would be a better place. So I'm excited.
For me, it's more of an intellectual curiosity, because I have an engineering type background, and I'm involved in crypto now. So I'm like, I just want to know like how can I talk to the blockchain Web3? How could I, pull some stats and run some numbers and stuff. So I don't know if any product will ever come out of it, but at least I'll know, like when I see a product running, I like to know, oh, that's how it works. I've seen that code. I know that code. I've written that code before. So,
hey, if there's a way to like pull data, and I know there's a way, whether you're using Infura or something, I just don't have any effing idea how to do it. But if there's a way to pull the volume in a pair relative to the liquidity in a pair, that would be a tool that I would personally use as a screening thing for LP, because then that's the starting point. That's a one point of data that you could look for, and if you had that screening tool, then you could pick pairs that were advantageous to provide liquidity in, because they have high volume and low liquidity. But then you also have to understand, like with liquidity, I probably should have said at the very beginning, only provide liquidity between assets that you want, all of one or all of the other. Like if you don't do it like just in some garbage token because it was a stupid amount of volume, you need to have it in assets that you like. Don't do it in like garbage shit that you don't understand.
That's a great one that's a good idea. Shoot me a message on that too to remind me, because I'm experimenting talking to contracts right now. So that may be something I can look into.
Cool.
Great one to go out on. What's up?
I'll shoot you a message on Twitter on that afterwards.
Yeah. Sounds good, man. All right, everyone. Have a great rest of your week. I'm streaming Friday on Hex's birthday. That's right. Maybe I feel like I have a stream tomorrow. I don't even know. I'm going to check the calendar. I've been doing a lot of solo streams recently. So if you don't see me tomorrow, you'll see me Friday. Funding Jim has said he's going to be there. He's back in the States, sounds like. So the time that'll work out even better, and maybe a couple other folks. We shall see. But everyone have a good rest of your evening. Hope you learned something. If you're just tuning in now, hit that replay gang mode and go have fun, because we talked about some cool stuff. All right, everyone, we are out. Peace.